3, 2, 1. Good afternoon, everybody. It looks like people are starting to flood in now. We've opened the gates, the floodgates, and they are pouring in. I can see the participants popping up by the second. What we'll do is probably give a couple of minutes to make sure that everybody gets in. We've all got a cup of coffee or water or whatever it may be, and we'll get cracking. What we're on now, 31, so if we get cracking in about a minute's time, because I can see that the number is just dipping up. Anybody know any good jokes, or anyone on here want to sing a song? Duncan, you've got some good pipes. You're going to start singing something?
Well, it's a generous offer there, Sam. But I think James is the one with the skills.
Not this week.
All the jokes I know you can't repeat over a webinar. I'm afraid.
Yeah, this is being recorded, and you remember you are employed, so yeah, it's probably best not to do so. I can see that the numbers are still popping up, but mindful that we are taking everybody's lunch hour. So first of all, I want to thank you everybody for dialing in. Again, appreciate this is your lunch hour, and obviously time is precious at the moment. We have put this webinar on ultimately to give you some insight to a mutual partner that ourselves at Futrli and ReceiptBank have, who is Duncan Lloyd from cloudaccountant.com, and also to hear the stories, and I guess the war stories almost as well in some ways, from James Trowman, who is one of Duncan's great customers, who's happy to share his experiences over pretty much the last 12 months or so. We're also going to cover off and go into a bit of detail, or get Duncan to give us an overview of Profit First. Now, Profit First is something that's only recently been introduced to myself, but we will go through, I'll get Duncan to go through a bit more detail on that. The session, as if you've ever joined one of the sessions before, we keep it pretty relaxed. Hopefully we can just have a nice flow between the four of us. Ollie and I will be asking the questions and doing the grilling, and hopefully Duncan and James will be doing the answering on there. We will allow a Q&A session at the end, so please, if you have any questions as we run through, do ask them through the chat or the Q&A, and we will pick them up at the end, but do keep them flowing through. What we'll do now, if everybody can hear me, I should have asked that first of all. If someone could just pop in the chat to make sure we are being heard. It's always worrying. Yes, perfect. Thank you, Leander. Perfect. And Richard. Oh, everyone's coming through now. So great. Thank you for letting us know that. I'm going to share screen now, and we will start the session. Okay. So, all right, let me get into present mode. Move your faces out of the way. Okay, so I guess it's probably worth just doing a very, very brief intro. For those of you who don't know me, Sam Horner from Futrli. My role is VP of Commercial Partnerships. I've been in the ecosystem for about 5 years now. Up until a year ago, I was wearing an orange t-shirt like Ollie, and I was at ReceiptBank, so you probably know me from that time. There you go, nice little bit of branding there. So that's me, and I will hand over to Ollie.
Hi everybody, my name's Oliver Smith, so I'm the Director of Strategic Partnerships at ReceiptBank. I've been there about a year, so Sam and I pretty much swapped over. Just as he was leaving, I joined. Prior to that, I worked at Xero in New Zealand, where I led the team over there. New Zealand's an exciting market with lots of cloud adoption. It's really interesting to sort of get a perspective on how accountants are getting into the cloud, and I've worked with a lot of the most forward-thinking practices around the world. I'm also a chartered accountant, qualified about 12 years ago, I think. So don't ask me any complex financial reporting questions, but I do have a bit of that context as well. So thanks. Duncan, over to you.
Yeah, I'm Duncan Lloyd. I'm the Managing Director of cloudaccountant.com, not to be confused with similar sounding companies. We are based in Leeds. We have staff based all around the country, many of whom who work from home. And we were born in the cloud. We've never had a high street presence. We've never had the traditional accounting model. We've always tried to use technology and to dovetail that with human interaction to give the client the best possible experience. Over to you, James.
Thanks, Duncan. Yeah, I'm James Trowman from a group of companies called Aspire, all based in the sport and physical activity and education sectors, delivering a range of programs, both based in the Midlands, but delivering all around the country as well, and looking to branch out international with some of our licensed partners abroad. We've been trading now for 15 years and working with Duncan for the last 12 months.
Fantastic. Thank you for the brief intro. I think what we'd like to do now is just, I know, thank you, both give an overview there, but if we could go into a bit more detail as to who cloudaccountant.com are, and also a little bit more about Aspire Sports. And also, you did cover actually then, when did you start working together? You will find these questions that we've on here are kind of there to position and help, and we probably cover half of them as we go through, but that's fine. But yeah, if you could just give us a bit more, I guess, of an overview, that'd be fantastic.
And I think also, sorry, just to add to that, what were you doing before? I think is always interesting. Like before you started your relationship, how were you managing that with your previous accountant, James?
Okay. Well, I'll begin, shall I? So cloudaccountant.com, we started about 5 years ago. We are chartered accountants, regulated by the Institute of Chartered Accountants in England and Wales. I've always been interested in how technology can make life easier, deliver better service to clients, and so we were a fairly early adopter of Xero, and the heart of our tech stack is Xero and ReceiptBank. So we use that for receiving information and showing it through the system and making sense of it. And then on top of that, we use something called Clarity HQ for reporting and also Futrli. So Clarity is we believe all our clients require advisory services, and Clarity gives us a platform to deliver that. So all of our staff are client facing, and they're all providing our clients not just with data and compliance work, but they're all providing our clients with advisory and forward facing and tax advice and helping them to make more money. So Clarity HQ, if you've not come across it before, I recommend it. And then Futrli is our premium product, where we do super detailed whiz-bang reports with graphs and comparatives and forecasting, and really allows us to provide an insight into our customers' performance, help them to run their businesses more effectively, and make more money. That's it in a nutshell. Over to you, James.
Yeah, thanks, Duncan. So Aspire Active Education Group, or a group of companies that specialise in sports and education, physical activities. One's a registered training provider, one's registered with Ofsted to deliver school holiday provision. One works directly with schools, early years centres and colleges, working with sports coaching educators going directly into these settings. And then the final one, on the back of the IP we developed over the last 15 years, we now license programs to companies both in the UK and looking abroad to other countries as well, which includes a lot of software development, so we can help everyone try and become fitter and healthier and more active. Started working with Duncan 12 months ago, really from a business partner. We're looking at our finance setup. We had an accountant employed full-time with us, an accounts assistant, and then we'd engage with an accountancy firm to file our end-of-year accounts. This was costing us considerable money, and a lot of the information we would get was just reviewing on what had happened over the last month or the past 12 months. And in a fast-moving sector, we needed to have more of a control of where our forecast was going, where our sales were coming from, profit margins, and where we really could be innovative and invest. Looking at some of the innovation funding that we could get back as well, and the research and development. So we were introduced to Duncan by another organisation that we work closely with, who consult with us on the training side to make sure that we're compliant with ESFA and Ofsted. And it was just the ease of what Duncan could offer, where we get real-time information that we can start predicting what our forecasts look like, both short-term, medium-term, long-term, and have more of an idea of where Paul and I, my business partner, can focus working on the business rather than in it, and making some decisions with some clarity, really. But then also from our management team, they could submit their receipts on a simple basis where it was done in real time, basically, rather than having to wait to the end of the month to try and find the list of receipts that they then give to our in-house accounts team, who then spend ages asking them where the one or two are that are missing, that then delays everyone in actually doing their day-to-day jobs. So it's been really good. The last 12 months, we've got real good control on where we are financially, especially going through the COVID situation. It's been having Duncan and his team there has been great. Really, we get up-to-date figures on almost a weekly basis that we can inform what we need to do, and accessing the furlough, bounce back loans, and the advice that's come with it. We're in a strong position to quickly turn things around rather than pressing the panic button and making rash decisions that could have a long-term effect on the business. Really
fantastic.
Probably worth pointing out that James is that there are actually 5 companies in the group. So rather than having files full of paperwork at the office, which are being managed by somebody there, we were able to set up 5 different ReceiptBank accounts and get them just sent straight into the right company. So having visibility on each individual entity's performance, it's been a real challenge. But having that tech set up has given it rocket boosters, and really enabled us to provide a decent timely report at the month end to help the directors make some decisions.
Yeah, it's great to hear, and also interesting that James, you're based, and I think the accent gives it as well, but you're
and the map behind you as well.
Yeah, and the map, yeah. You're based in Birmingham, aren't you? And obviously
that's my weather reporting job. That is on the side.
That's the 6th business, that you need to get on ReceiptBank. Yeah, it's interesting. Obviously, you're based in Birmingham, and Duncans in Leeds. So you say it was a mutual contact that you had. It proves that you don't have to be. It doesn't have to be a business around the corner for you to work with. I guess the technology that's put in place, I presume that's helped massively with the communications.
We've streamlined everything, and it's really helped our management team take control of what's happening as well, rather than relying on one person in house and sort of almost hiding behind that. You've got that one person that will make the decisions or use the figures or whatever the process is, whereas we've done it as a management team, so they bought right into everything we've done, from a cash flow model to income, expenditure, using ReceiptBank. The whole process they've done and taken on board. They're quite a young management team, so they're quite happy to use all the technology, and I think our processes are definitely streamlined now, and everything's a lot more efficient, and from us it's been a cost saving as well.
Cool. Previously, your external accountants just did your kind of year-end stuff, but how often would you say you engage with cloud accountants? Do you have a weekly conversation? How does that kind of work?
To be fair to Duncan, through all the pandemic, it was probably every hour.
Wow.
But we've had 3 or 4 people from Duncan's team from cloud accountancy that we've worked with since we've started working with them, and you can pick the phone up, email them. We have regular Zoom calls, and it's not just coming through me. So if the team need to ask questions, then they're all easily accessible, and the information's at a fingertip for them. So it's been probably easier to deal with people remotely than it is sometimes when people are in your office.
Is it true to say as well that Duncan had a long flowing hair before he met you as well?
Yeah. And I didn't have a grey beard either, so that was coming through. So.
Okay. And another thing that I believe came from yourself as well, and has helped both of you, was the introduction of Profit First.
Yes, yeah. So Paul and I, business partner, we were reading the book and looking through always the strategic side of where we can take the business, and I think reading that book and then heading into lockdown as well, and the panic that went through with that, we've really had to sort of look at the strategic side of our business. So we did a lot of business continuity planning, looking at this profit first model as well. But also one part of our business is very seasonal. So during the 6 weeks holidays, we can generate almost 25% of our overall income, and that was decimated from Easter, Whitsun, and the summer taken away. So it's almost like that. Oh, hang on, we haven't had this for 15 minutes. We need to take a step back. Don't rely on some of the seasonal part of the business. How can we ensure that we haven't got these issues going through, and what can we focus on? So using the profit first model of using different bank accounts, and just the theory of putting the money aside and ring fencing that for your profit, your wages, any of the taxes, the operating expenses, all that side of it. as well as then that sort of helped drive our business continuity, and getting the team involved in that again, and them understanding that process has made it quite a good challenge. It's going to take us probably from the setup we've got with the different companies, it's going to take us probably 12 to 18 months to realise that, but it's changed the whole mindset of the organisation for the positive, and give us some real clarity on where we are now and where we need to get to, and what the steps are and the strategy to achieve that. So it's exciting times for us. We've continued to, luckily through this strategy, we've continued to grow the last few months, which it should be a godsend.
And Duncan, can you tell us what that's done for your business as well, for the accounting firm, and also your wider clients, and also for the benefit of myself, Ollie, and anyone else on the webinar? Can you just give us an overview of Profit First if they don't know it already as well?
Yeah, of course. Well, I mean, firstly, I think Profit First is an absolute game changer in the world of advisory. And having qualified as a chartered accountant 20 years ago, and been in practice for the past 7 or 8, and having told my clients, just look at the P&L, rely on the profit, the cash will come. James introduced me to the book Profit First, which is behind me, by a chap called Mike McAllister. And it was a real head explosion event for me. I thought, this is what entrepreneurs need. They still need the full financial reports, the P&L, balance sheet, ARAP, etc., etc. Not least if they're looking to sell their business at some point in the future. That's what an investor would expect to see. But Profit First allows them to run their business in a way that is natural for them, because most entrepreneurs will look at their bank accounts, and so actually we're trying to work with that behaviour to help them run their businesses effectively. And so what it does, it enhances frugality and innovation, and in doing so, increases profits. So the principle is nothing complicated. The principle is you set up a minimum of 5 bank accounts, money comes in, and then you allocate the cash on pre-agreed dates in the month by pre-agreed percentages. So those dates and percentages are established through what we call a profit assessment. So we look at the historic data, work out what the allocation percentages are, and then we map over the next 8 quarters, so over a 2-year period, where we think those percentages should end up. And I mean, I could talk for hours, but I'll try and keep it short. I think the key takeaway is that you've got a given amount of money in your operating expenses account, in which you then have to run the company. Mm-hmm. And when the day comes, because it will be when, there isn't enough money in that account, that is your business telling you you can't afford your bills, and you need to cut your costs or increase your margins, or you'll take action pronto and not wait for a report a few weeks down the line, or sometimes a few months down the line, by which time damage has been done. So it works with the entrepreneurial mindset. It gives them a very quick temperature check on the business and encourages them to take action to enhance profitability. Okay,
fantastic. So, and as a rule of thumb, and this I might have missed this completely, but as a rule of thumb, with it being 5 bank accounts, is it 20% in each, considering taxes? Typically,
no, it would depend. It would depend on the development stage of the business. So, for example, a startup will actually have quite a large proportion of the income going in owner's pay, maybe 50%.
Yeah.
Whereas an established business will have a much lower percentage, even though that percentage is more pounds. Mm-hmm. And so we're trying to track that growth and move those percentages in such a way that there's always enough money to give the owners a predictable amount of pay, and make sure there's no tax surprises, and to make sure there's sufficient money to run the business. But the key account there is the profit account. It's amazing how many of our clients have previously run their businesses. They think they're entrepreneurs, but actually they've just got a job. The business just ticks over and barely makes a profit.
So a lot of businesses will do this today, but just for like VAT or something like that, won't they? Where yes. They know it's a defined amount, and they'll just put their VAT as a side, so they know they're going to pay that. But not many will do it for these other categories. They'll just kind of like make assumptions or guess, but they don't really know at any time how
That's
it
exactly it. That's exactly it. What we're saying is your business should pay you a salary, and they should pay you a quarterly bonus. Just like you get a dividend check if you own shares in BT or Tesco or whoever. And that change in mindset, that change in running your business as if it was a public company, it is entirely positive for their behaviour and for their bank account.
Okay. So I guess looking at this, is this, do we think this is what the likes of Monzo and Coconut and a lot of the challenges are trying to achieve with their pots? So Monzo has pots, doesn't it? I know Coconut have launched something very similar. Yes, predominantly that's to record and pull the VAT out, but do you think that's the kind of the methodology that they're using?
I think it's exactly that. I mean, I'm a big fan of Monzo. I use Monzo personally. I use Monzo in our business. Because obviously setting up loads of accounts incurs fees. No one really wants those fees. There is a blog post on our website where we analyse various bank accounts and their merits for Profit First, and yeah, I concluded that Monzo was actually the best one available.
Although Monzo probably don't do this for their
Tide and Starling, they've all got their benefits for sure.
Mm.
They probably don't do it for their own accounts, though, I imagine, because they'd have to have a negative percentage in profits all the time. It might be a bit of a challenge.
Yeah.
I'm interested in, like, this is really a fascinating kind of model, but this maybe brings us on to the next sort of part of it, which is like with COVID, that is something that's would have potentially hugely changed those percentages that you might choose to allocate to profit. Because, you know, for James specifically, but also for a lot of businesses where suddenly their expectations about what percentage of their sort of fixed costs they can allocate would suddenly change overnight. And so how did you get through that part with Profit First specifically? I think it's pretty interesting to understand.
Well, for example, with owner's pay, you would, let's say you're putting in, I'm going to pull out a figure out of thin air here. Let's say you're putting in £5,000 a month, but you're into that account, but you're only taking out 3,000. You always take out less than you're putting in. So that when you get to lean months, because those lean months are going to happen, you can keep on taking that £3,000 a month because you built up a buffer. And so this enables business owners to have much more predictability with their personal finances, because having secure personal finances is a key determinant, I think, of running a successful business. You can't be worrying about paying your mortgage and your bills if because that's going to take away your bandwidth to run your own company. But I think with regards to James's companies, we were just at the point, I think, in February and March, we were starting to have some pretty decent reports out of the system. I was providing James with our reports in Futrli, and then suddenly COVID hit, and like he says, we were on the phone a lot. Things were changing. HMRC were making announcements every few days, but we felt, well, James, what you tell me how you found it?
I think having the relevant information right at your fingertips helped us make the decision. And I think a lot of people that we spoke to straight away shut their businesses down, furloughed themselves, just so they could take some money out of it. But Paul and I saw it as an opportunity with Duncan then, really, that we could use that as our opportunity to get a leg up on our competitors, because we could still work. Majority of our management team still worked. So because we'd allocate or knew where we were financially and where we could predict over the next, well, first initially we planned for it to be closed with 1 month, and it was 3 months, then 6 months. We knew we had enough cash flow within the business reserves and contracted work through the government that we could put open book policies in place, which Duncan's team helped us do and achieve that. So for myself and Paul, we didn't have to worry about our wage and the management team's wage. It was more about looking after their health and well-being, making sure that everyone was safe and well, making sure that we had the relevant systems in place that we could all work remotely and continue driving the business forward. So I've mentioned it a couple of times already, the business continuity side of it, the planning for the future, that when we could open the doors, we'd hit the ground running, which has been the case really. We're at capacity of one of our businesses already from October, so we won't need to be looking to expand that part anymore, because that's the position we wanted to get ourselves in. But having the relevant information to make the decision of what our capacity was, knowing what money was coming in short term, medium term and long term, meant that Paul and I could still take the wages that we got, the management team, and all of our team have been on 100%, even if they've been furloughed. We've had the wherewithal to be able to look after them. So we put a survey out at the end of COVID, when we come out of lockdown around here, although we're just going back into it in Birmingham, the school market where we work and the industry we're still in, we're still very much 100% operating. We were scoring 95, 96%, and the questionnaire back to our team and how we've dealt with it, have we supported them, do they feel safe? We've got a good percentage of that back, because we weren't weren't making panic decisions. We right from the start, we told them that we weren't looking to make redundancies. We weren't going to use this as a way of cutting costs. We'd look at other areas that we could maybe cut costs or reallocate funds to different parts of the business. But that's all because we've got the information at our fingertips, rather than trying to spend a week or so trying to work it all out, by which time everything was moving that quick, we'd be another week or 2 weeks behind.
That's brilliant.
So I think having that support and the figures really at all times is what's really saved us the last 6 months.
That's amazing to hear. And if COVID had hit this time, or March 19, before you'd actually sat down and met with Duncan, where do you think your business would be now?
Realistically,
this doesn't mean that your answer doesn't mean that Duncan can increase your fees, by the way.
It's on the disclaimer at the start of this, don't worry. If I'm realistic, we would have made some probably horrific decisions. So I wouldn't like to think where we'd probably be, but we won't be in the position we're in now. Right at the start in September, we invested because we could in some software that's managed to keep one of our businesses going. It's a training provider part of our system. So that's kept going at 100% all the way through lockdown, and that means we can deliver training nationwide remotely. And it's just it's knowing what we can and can't do, and where we've got the funds allocated, but also having, as the information was coming out so quickly, how quick could we react to that and put ourselves ahead of the game. So we'd certainly, even going through the last 6 months, we're certainly in a stronger position now for the last 12 months, although it's probably been very painful for Duncan and his team trying to sort out where we are and where we want to go. But we come through the back of that. So the next 12 months is already mapped out. Our financial year ends is like an academic year, so it finishes the 31st of August. So we just started our new financial year now, which is quite exciting as well.
It's so good to hear these kind of stories, because you hear a lot of horrible stories about businesses who have been so impacted by COVID, but they had to make those panic decisions because they didn't have the information at their fingertips. I've heard also stories where they try to engage with their accountant about things like C-bills and bounce back loans, and their accountant's so busy trying to manage their own business to transition it from a desktop environment to the cloud that they can't actually manage their clients. But cloud accountant, you were already in the cloud. So I imagine, like, when COVID hit, yes, it was a big disruption, but actually nowhere near as much of a disruption as it would have been had you been an on-site kind of like physical receipt-based kind of business. And therefore you're actually able to spend more time talking to your clients than just making that change within your own practice. Is that fair to say, Duncan?
I think that absolutely is fair to say. I mean, we only have a small office in Leeds because our staff are welcome to use our office, but they also work from home. We offer all of our staff flexible working because we think that gives us the pick of the candidates. So it's great to hear James's kind feedback on his experience with the team, which is exactly what we're trying to achieve.
Brilliant.
Yeah, it's an interesting one you mentioned on the cloud accounting piece. I mean, I heard of real horror stories that when the lockdown hit, I think it was that Monday that it was announced, there was people on the tube, on the train, on the buses, or in the cars carrying desktop their desktops home with them, and the monitors,
computers,
and even a top 50 firm, I won't confirm who it is, they furloughed their business development staff, I'm told, because of the cost that it would for them to buy them laptops was so high, that it was something, I don't know whether it continued for the 6 months. I'm sure it hasn't, but I think they had to at the time because of the initial setup cost that it would be. I think that's the important piece, is that back to what Duncan and James are saying there, it was already in play, and that's it's great to hear.
I'm sure you can't help but feel a slight amount of smug satisfaction about that you've pre-prepared for this kind of eventuality by being on the cloud and by using all cloud software, versus some of your peers who maybe have taken their time to make those decisions. And it's always a little bit of a
no comment, Ollie. No comment.
Yeah. So if we just go through, and I think we've probably covered some of these questions on here, but and again, I think everything you've told us is really interesting to hear. One question that I had actually, James, obviously with the majority of your 5 businesses being linked to education and the schools, did any of the training and education continue in the schools? Because I know you obviously had the online stuff, but did any of it physically continue? Because I'm just thinking a lot of them were running at skeleton, just with I guess key workers, their children being in the schools and so on.
Yeah, right at the start, back probably end of February, beginning of March, I think my team thought I was mad when I put a risk register in place. But we started looking at what the risk would be of us staying in schools and working in schools. I think when it started to come into Italy, we started to take a real notice of what was going on. So from a cash flow point of view, we did a risk register on our finances, contacting all people that owed us money to get as much cash in the business as possible. So that took a big chunk of the worry away. And then certain schools, when we work with them, some of them 5 days a week, others we just drop in on a day or two basis. So we liaised with each school. We had probably 2 or 3 members of staff that worked 5 days a week in the schools, all the way through with key workers. Some of the schools we work with have got some tough, vulnerable children in there. And they see sport and physical activity as a way of keeping them engaged and keeping them happy. But we teach a lot of maths through sport, or English through sport as well. So some of the programs we were doing, we were taking the children out of the classroom, especially when the weather was so good. So it was a way of engaging with them and kept us going. And we had an open dialogue with all our schools all the way through it. So there was a PPN document that came out from the government. So with everything else they had on, we worked with Duncan to create an open book policy. So where we had furloughed some of our team, we weren't double funding the income to the business. So we would go back to a school and say, we furloughed the member of staff in your school. These are our operating costs, and we'll invoice you for the difference minus the profit. So we set out right at the start just to break even with the government funding that we receive anyway. And we were working with Duncan on a daily basis, really tweaking things and being able to get the message out. And then Duncan's team also send out all of our invoices and check all the remittances. So we was on top of that on a weekly basis. And I think we probably had one customer at one school that questioned us, and we set a Zoom call up and ran through the actual calculations and how he worked with it. And it's resulted in us getting an extra 3 or 4 days of work a week now from that school. So I think the key part was communicating, not furloughing some of our management teams, so that they are there to help our customers and almost become the experts of what was happening. Which without Duncan's team support, then that wouldn't have been possible. We'd have been scratching around just to keep our own heads above water. Yeah,
it's great to hear, and genuinely shows that Duncan is a part of your business, and it probably should be pushing for shares, but
don't give him any ideas.
no, exactly. There's going to be a difficult phone call after this, isn't there? It just, and yes, I've worked in this space for the last 5, nearly 6 years, but to hear the story, and actually that pretty much is every part of your finance function is cloudaccountant.com. That's the key part to it for me, is like the involvement that Duncan and his team have had. It's so powerful, and again, I'm not pushing for his fees. It'd be really interesting to see what that finance function would cost you if you were to employ. And I think that is the hardest part for an accountant to deliver to a small business until they're actually delivering it. And I think you've seen it and you're living and breathing it. That's the great thing to hear.
I think the biggest thing, Sam, is that our team don't recut. We refer to the cloud accountant team. So we've got Duncan, we've got Ellen, we've got Amy, we've got Gemma, and all our team refer to them by name. So it's not as if it doesn't even feel like you're working with another company. You're working with people that are almost part of your team on a daily basis. And Duncan makes more like Zoom calls with the t-shirts with cloud accountancy on all that, and the professional side of it, but they're easy to talk to and easy for our team. Really quite now getting adapted to the systems and everything. They'll ask all the questions that in the past they probably wouldn't ask, because you've got someone sitting in the office that would just almost not engage in so much because they're like, I'm too busy for that, or I don't want to do that. And I think the education side, using all the different technology as well to give my team more of a control, which then takes a lot of the pressure off what I'm doing to be able to keep running a business rather than getting stuck involved and making these decisions with them.
Can I ask Duncan, how do you, without giving specifics, but how do you set up your pricing model for these kinds of services? And the reason I ask is, more traditional accountants will charge by the hour, right? Or even 6-minute increments. And that often causes clients to fear contacting their accountant, because as soon as they pick up the phone, it starts the clock. Do you do that kind of pricing model, or do you have a completely different, do you have like a fixed fee? How does it work?
Yeah, we have a fixed monthly fee, and that fee is broken down into very specific tasks and functions. And one of the reasons we do that is because, first of all, we want absolute clarity on what we're engaged to do, so that we can schedule the work and make sure it happens. But also, there can be, over a long engagement, the work can move between us and the client, and we're entirely relaxed about that. Yeah, it might be, for example, that a client says they want a member of their staff to do accountancy training, and they want to bring certain things in house. So you say, okay, well that's now in house. Our fee goes down. You know, we're very happy to educate our support our client staff in that process. We see it being you know, a long-term winner for us. If the fee ticks down a bit, that's okay. It's really the long-term relationship that we're after.
I think that brings me to one of the questions I wanted to ask, and it's an awkward one to answer, I suppose. But there'll be a lot of accountants listening to this now that have given so much goodwill to their clients during this time, and are afraid to be putting bills in or invoices in for the work they've done. I think you've pretty much covered it there, but is that your mindset with all of your clients? Kind of, we've got you through this, and now it's like, you know, we're looking at this as a long-term play rather than actually here's a bill for 10 grand for the work that we did over the last 3 months. Yeah,
for sure. I mean, I think COVID has obviously been an absolutely, you know, ghastly situation. But for accountants, it's been our opportunity to demonstrate additional value. I mean, like James said, we're on the phone a lot. That's helpful to me, actually, because you know, we were both trying to work out what was going on, and then I was sharing that with my clients. And we take that collaborative approach with all of our clients. You know, we're not handing down tablets of stone saying those are the numbers. We're after a relationship. We're after constantly refining our understanding of their business so we can better support them. And we need information to come back from them, and we need to learn from them. And yeah, well, James and Paul, James's business partner, gave me the idea for Profit First. So I can't complain on the exchange of ideas ledger.
And you do use Profit First in your practice as well, Duncan, is that right? I think we had a question on there about it, so I think it's a good time to ask that question, yeah. I think one of the biggest myths I hear about fixed monthly fees is that you have to just do unlimited work for that fixed fee, and that's not the case, right? If the scope changes and they ask for different work, your fee can change. I think that's something that people don't, often accountants that I talk to don't realize that. They think, oh my God, if I'm charging this much per month and then the client asks for all this extra work, how am I supposed to do that for this much money? That's not true. But
that's not true. I mean, what we tend to do, if the client wants something that's outside of the scope, we'll say, yeah, sure, if we can do that for this month, we'll do that, and there won't be a fee. And if you want it in future months, then it's X. Yeah. And they can either decide that they want it or not.
I think that's worked with Duncan. It's the relationship the team builds with us, and probably his other clients as well, because it's very open. You can go backwards and forwards. You can ask them questions, and we've tweaked stuff so much as we've gone through the last 12 months just to make sure that everything's going to be streamlined. It's not, oh yeah, we've achieved that now, but how else can we make it? Yeah. What other technologies out there? What other processes? So this morning we're looking at how we can reduce our age receivables. So we've got another process map. We're on the phone to Duncan saying, look, can we do this? Can we get these sent out quicker? These are the time frames. So we can almost push back to Duncan and say, can we, what else is out there? What can make us more efficient and save all of us time? And then we've had some training for one of our team members off Duncan and his team to be able to pick up certain parts that we can take a little bit of control of without disrupting, and then causing not a conflict in terms of relationships, but a conflict of information that's going backwards and forwards. And so, yeah, that's all worked really, really well from here in Birmingham up to Leeds. Really, there's been no issues with that.
I think that's one thing that accountants should be fearful of, actually, is their clients come to them and saying, "Why didn't you tell me about this bit of software that everyone else is using and I'm not?" Because they've heard it from a mate or from a colleague. Yeah. And so we've got to get it out there and get it used and get the maximum benefit from it.
Absolutely.
Fantastic. I was just going through the slides there to see what we had left, and actually we've pretty much answered everything that came up on there. The one I suppose just to come from this slide, it's 10 past now. We'll move to some questions shortly as well. But looking at this slide here, is there anything positive you can take? I think you've pretty much answered that, because it's actually well, I'll ask you the question again to both of you, but I think you pretty much answered that in the discussion we've just had. But yeah, is there anything that you would take away over the last 6 months, actually, you know, what that you will move forward with and have learned from, I suppose?
Yeah, from my point of view, it's just it's the business continuity and the risk registers that you get in place about looking at all aspects of the business. As we've used that 6 months to be able to plan the strategy going forward now for the next 3 years. Working to a capacity model, so we've got no wastage, making it as efficient as possible, but having all the relevant information. Not just from our accountancy side as well with Duncan, but other parts of the business, whether it's HR and up-to-date records with the team, knowing more about them, the communication side of it. So yeah, it has been tough, but it's been a good, almost resetting the business. And after 15 years of just keep going every year and almost not celebrating any successes and not getting too down when it gets down, it's almost like a chance to take a step back, analyse everything, and then it's almost as of the 1st of September, schools will all back in, let's go again. We're going to hit the challenges head on, and hopefully now have a more of a robust business looking forward for the next at least 3 years, and making that a rolling program of planning.
Fantastic. And
I think from my point of view, I mean, I've long thought that advisory, every person in the firm needs to be doing advisory, but I think certainly over the past 6 months has become even more important. You know, every client has needed support, even if it's a quarterly catch up and a how are you conversation. But some aspects of looking ahead is absolutely critical, and we see all of our team getting involved in that. You know, from the most junior members, what's it done 6 months? They should be on the Zoom calls, they should be using Clarity, they should be engaging as much as they can.
I think one biggest thing probably is surrounding yourself with good people, right people that are good for your business, that have got an interest in what you do, where you are now, and where you want to get to in the future, not just what you've done in the past. And I think that's definitely evident with what we've done with Duncan.
Fantastic. Yeah.
Should we jump onto some questions?
Yeah, I can't see them at the minute. If I stop share, I should be able to see them as well. Go on, Ollie.
Shall I go through? So this is coming back to the profit first part. What do you do with the money in the profit account in the short term? Does it just kind of, I guess the question is like, does it just kind of sit there and you take it at the end of the year? How does that work? Yeah,
it just sit there. Well, one of the principles that I didn't go into was that of temptation. And what you're required to do is set up a profit and tax account at a separate bank. You know, to send that money to a bank that is actually hard to get to. So it's out of sight, out of mind. But that profit is there for two reasons. One is to reward the shareholders, or alternatively, if the company has debt, is there to pay down debt. So even if you take 1% of that profit and buy yourself a coffee, it's doing its job. It's rewarding the shareholders for making an investment, and that's what a company is there to do. So this is one of the things I like about Profit First. It doesn't matter if you're big or small or loss-making or profit-making or just started or established. That's a retrofit it. You just start it, and next time you get a receipt, and you'll start to see some benefit.
Fantastic. Okay, someone else asked, will there be a recording of the webinar? Yes, I believe that's the case. You'll get an email after the fact. Yeah. Question here from Elliot. Surely all small and medium-sized qualified accountants are in the cloud, as Xero and QBO have been around for years. Surprisingly, no, actually. So there's around about 6 million SMBs in the UK, give or take. If you add up the numbers that Xero and QBO and Sage report, make some adjustments for the sort of real businesses rather than sort of, you know, the empty licenses that some of them sell. There's only about 1 million that are actually on the cloud in the UK. So it's still relatively small. If you're kind of in this community, you probably don't talk as much to some of the more older traditional accounting practices, but there are an absolute ton of them out there who don't use cloud at all.
Oliver, 12 months ago, we weren't on cloud. So since we went with Duncan, that was one of the reasons why we chose to do it. We were behind the times, really, what we were trying to do. Yeah,
there's still a lot of business.
Elliot, I had a similar thought that everyone's going to be on the cloud, and actually our name, Cloud Accountant, will need changing. It'll be too obvious. Then I thought, no, we're just going to be the Caravan Warehouse of the accounting industry.
Yeah,
we're going to have a name that's a bit out of date, and I don't care.
Well, it's interesting. Like when you look at, if you look at most accounting practices websites, they have a separate section for cloud accounting, right? Which just goes to show that it is still in a lot of people's minds. It is separate. You know, if I relate to my experience in New Zealand, which is much more penetrated, where virtually 100% of businesses are on the cloud. Most practices don't have a separate cloud section because everybody's on the cloud. So why would you have a separate section for that? Do you use Profit First? Or we already answered that one. Oh, Duncan, question for you from Fiona McAllister here. What software do you use for your proposals and pricing? Do you use something like Practice Ignition or Go Proposal maybe?
Yeah, we use Go Proposal.
Go Proposal. Yeah, they're good friends of ours. They're a good bunch of people.
Yeah.
And then there was one more question in here from Sarah Bruce. And I'm not sure if this is directed at Duncan or James or maybe both of you, but how quickly did you see Profit First start working for you?
You'll see it in month one.
Month one.
Open a profit account, and next time you get a receipt, put some money in it. It's already starting to make an effect on the way you run your business.
Okay, and on the Profit First stuff, Duncan has a bit of a plea to current Profit First accountants or ones who are wanting to. So Duncan, I'll let you do the pitch here. So I'll let you have the floor. All
right, thanks, Sam. I'm a big believer in collaboration. You know, we as accountants have got a job to do, and especially those who are already Profit First accountants. There aren't many in the UK. There's only a handful, and respect to each and every one of them. So, you know, very keen to link up and collaborate and help each other and refine the system. And because it does need slightly tweaking from the US book to make it work in the UK, particularly regarding tax, and I think we can all help each other. So yeah, I'm absolutely open to LinkedIn and Zoom calls and helping each other out.
Yeah, what we will do. Thank you, Duncan. What we'll do after the call, once I've got the recording, everything's through, I'll send an email out, which will have everyone's contact details as well. So if you want to speak to James about what he does at Aspire, if you want to run through anything with Duncan or myself and Ollie, then I'll put links in there, so you can pick those up from there. And we have a couple of other questions that have just come through. So keep firing through if anybody does have any questions.
The question here was, did you do the official Profit First course, Duncan? And James, I suppose, as well.
From our point of view, is reading the book first, but then I was going to say, I've got Duncan say it's a change the whole mindset for the whole business. It's not just using a different bank accounts to start off with, but when you start planning your all out, it shifts the whole mindset of what we've done in the past. So we've always taken our business and looked at it in a 12-month section. Now it's very much on a monthly basis, right? We need to be looking at what we generate on a monthly business, take the seasonality out of it, and almost remove that part of the business away from the rest of the group, although it still forms part of the group, because that's what we found, especially going into COVID and looking at Profit First, is that we rely heavily on the last 2 months of our financial year to make the most of our profit. Well, if we can still keep that profit, but then use Profit First for the rest of the much we're going to be in a much stronger business, and it's really transformed how we our strategy, you know, for this coming year and for the next 2 years as well.
We are Profit First accredited, so you know we have to. There's a process. We have to sit exams. We have to get client testimonials. There are various things we have to do to get that stamp of approval.
Cool.
Fantastic.
I think that's all the questions. Sam, did you want to just get those couple of other slides?
Yeah, we do. It sounds like we're doing some kind of podcast with the God. This is being brought to you in sponsorship with. But yeah, well, firstly, wanted to obviously thank you, James. Say thank you to Duncan and James for volunteering to do this. Appreciate we're taking. We'll take more than an hour of your time because we've had some planning for this as well. But yeah, genuinely, really, really interesting to hear and love the stories because, you know, yes, we work with the products like ReceiptBank and Futrli, but actually we don't see the direct impact, especially Ollie and I working the partnerships piece. We don't speak to the end users as much anymore. So it's really, really, really good to hear the stories and actually the fact that, you know, you're actively volunteering to do this, you know, James. It's massive and really, really helpful for us. So we're just going to give you a little bit now. If you weren't, or you have been under a rock for the last 24 hours, at Futrli we actually introduced our 2.5 years in the waiting, new products. So we have launched a product called Predict. We launched it yesterday on a webinar. We had over 1,000 UK accountants attend, and we've had just over 500 Australian attend a webinar this morning. So why am I telling you about this? Well, one, it launched yesterday, but two, it is the first in our ecosystem, so within Xero and QuickBooks, is the first direct and indirect forecasting tool, cash flow forecasting tool. So Advisor, which we've had in the market for 6 years, which is an amazing tool, which is essentially built for your longer term forecasting. You know, what James has just talked about the 3-year forecasting piece, is absolutely still relevant in the market. However, we never had a product that would do something from a short-term cash flow perspective. So we've actually combined the two. So Predict will pull your P&L, cash and cash flow and balance sheet across, but it will also take into consideration your invoices as well. So it will do the short-term and long-term cash flow for you. And the idea behind Predict is actually you can put it in the hands of the client. So use Predict from a more regular basis, and then Advisor is more about the in-depth, like board reports, monthly, quarterly meetings that you'd have with your clients. We are
never been a better time to look at cash flow predictions. I saw in a Xero webinar this morning that there's a 50% increase in people searching for cash flow apps this year, year on year,
wow.
Probably because of COVID, right? And how important cash flow is because of that.
We need to get some spend on SEO and PPC, then, don't we, really? But no, the other reason I'm telling you this as well is we're running a special offer for accountants for the month of September. We're giving you 50% off the price of Predict, and we're giving you that for a 12-month period. So if you take out before the 30th of September, we're not saying buy 100 licenses. We're saying, you know, buy 1 or 2 for the clients that are right now, and then actually see the power of what the solution do. But the idea is once you've signed up 1 within this month, then actually you get that discount for the remaining 12 months if you add any further clients on there as well. So that is my pitch. I will send the discount code out and also information on it in the follow-up email, and I will hand over to Oliver now.
And much simpler for us. We haven't just launched yesterday a brand new product. So if you're not already using ReceiptBank, ReceiptBank, as you heard, is crucial to getting that real-time data into your account so that you can have those conversations with your clients. If you're not already using it, you can get a free trial. We'll be sending the link through to that. And another plug also for Xavier, which is a business that ReceiptBank acquired quite recently, which also allows you to analyze a lot of the detail behind your Xero account. So if you have Xero clients, it shows up anomalies and allows you to really pinpoint those kind of ideal conversations that you might want to have with your clients to help the health of their books. So that's another one to look at too. Xavier as well. Brilliant. Good to hear, Duncan.
Do you know what it's, Duncan? It's like we planted you. You talked about clarity on our partnership as well. You know, a goal proposal that ReceiptBank are working with. It's helping us all. And we've got a couple more.
A nice message from Fiona McAllister there. Saw the webinar yesterday. I think she's referring to the Predict one. Looks like a fabulous product. I'm signed up to use it for our own finances in the firm. It's what we've been waiting for years. ReceiptBank, Streamline, and Xavier are an amazing combination to plug into Xero. So you heard it here first from Fiona McAllister. Thank you very much, Fiona. That's great.
Excellent. And we've got a panelist from. We've got somebody, from Australia that signed up to Xavier, which only launched a week
launched
ago,
in Australia 1st of September. Yes, so great to hear, Eleanor. Thanks very much. Cool.
Fantastic. Okay, well, we are 6 minutes early, so I think we'll give you, not only we're giving you great insight, but we're giving you time back as well.
one unit of time increment for those of you still using still using that.
Well, yeah, once again, thank you for everybody who's dialed in. We've kept everybody throughout, which has been great. And also, massive thank you to James and Duncan for giving up their time and sharing their stories, been hugely beneficial. So love it. And actually, yeah, Eleanor says she lives in Birmingham as well. So love to see it on the map, James. There you go.
Brilliant. Thanks very much, guys. Really appreciate the conversation.
Cheers.
Good to
Thanks
talk.
everyone.
Bye.